This is Rod Guzin and Spooman for Risk on February 4th, 2010. All times on the chart are 1 minute bars, Central Standard Time. What did you know before the open today? You knew the probability was that there was going to be a short, and that probability was about 65% in favor of a sell-off. If you don't know how we calculate that, you're welcome to contact us, and we'll be happy to discuss that with you in private. Now, once you started looking at the probability of a short and where the market went right out of the gate, and that there was not much in the way of a retracement today, where did you know, based on pattern, where did you expect the low of the day to be? Not in terms of price, but in terms of time. Our traders knew that the probability was very strong that the low of the day would be in the last half hour of the day. Now, if you don't know how we figured that out, again, we advise you to ask for a demo. We'll be happy to go into those details with you. That information is very useful, but you've got to know what you're doing with the information and how we arrive at that in terms of a conclusion. Look at the premium today. Now, there were some interesting setups on the premium, and we're just going to talk about a couple of them. This low on the premium here, which corresponded to this little low here, told you right away that the market was coming down. Now, if this was the low and this was the premium low, the probability that this low would be exceeded is pretty good. So looking for a short right in here worked out really quite nicely. You had no new low on the premium here, but you did over here. New low on the premium, new low on the Spoos. You're not even into 12 o'clock yet. So any rally that comes off of this should also be shorted, because this is indicating the Spoos should drop below 64.75, which they ultimately do. They do here, and then again right here at 63.75. But what happens at this point? We have a new high on the ES premium. A new high associated with a new low is an immediate change in market direction, at least for a time. And just an unskilled eye could have told you where the market was most likely going to go. So first of all, you're shorting the market. Now you're long based on the new high on the premium. Pattern says your low will still be in the last half hour. But just take a look at this. Now, there's an old adage about support and resistance. I hate the subject of support and resistance, by the way, because as far as I'm concerned, there's only resistance. There isn't support. There's only resistance. But that's just the way I look at things. All right, the market comes down here, and where does it find support? Right under 1070. And as the market rallies back, where does it go? Right back to the same price. That which is support now becomes resistance, and today was a classic example of that. This was support, now it becomes resistance, and we don't get above that line. So when we had this new high on the premium here, that kind of gave you at least a heads up as to where this market was likely going to go, right back up to that same price level. And then tanks again. Okay, now let's take a look at another piece of information that we gain from the VIX. Now, from the VIX here, we're going to talk about some proprietary calculations as well as divergence. As the market was coming down, at this point in time here, we were hitting a new low on the VIX, a new low on the Spoos, a new high on the VIX, and we were hitting a proprietary calculation. At this point, we drop just a hair lower on the Spoos, another proprietary calculation on the VIX, and we now see the pivot. Watch very carefully. We have a new trend down on the VIX. We're hitting our proprietary calculations. We should be hitting new highs on the Spoos relative to this pivot. We should be hitting new highs as the VIX moves down. Do we? Here's the high, 74. We never get above 74. We go to 74 or 73, 75, but we never get below 70. No, pardon me, above 74. So the VIX is continuing to move down, lower, lower, here, 73, 75. We're not hitting new highs. And then we go even a little lower than that, and we're hitting another calculated number here. What does that amount to? If you go to our website, RSKsys.com, and check on the section on divergence, you know this is a type 2 divergence. The VIX is exhausted, the market is already shorting, and the market should drop, which it does. However, the market rallies back up. Now this isn't a low, obviously. This isn't a low, but the VIX is now continuing to move up from here. So what does that naturally tell you the Spoos should do? The Spoos should drop. We are now looking to hit another calculated value on the VIX. Do we? Here? No. We do not hit a calculated value here. Do we hit it here? No, we do not. We do not hit another calculation on the VIX until here. All right, 1247. Now we're hitting a calculated number. The VIX continues to move up here, and then even at this point, we have another form of divergence. The VIX is overextended, and the VIX should now begin to move down. The Spoos, however, do come down even further. They do not hit a calculated number here, but this is where we hit the new high on the premium. So that changed everything. But the VIX was overextended. So again, the VIX moves down. And what happens again? Right here, VIX hits a new low relative to this turn. We're at a new high on the Spoos. And at this point, we're at a new low on the VIX, lower high on the Spoos, again a type 2 divergent. VIX is overextended, and up the VIX goes. And that results in your last 10-point drop before the close. And we're hitting, as you can see, calculated numbers in the last 30 minutes. So with the aid of the premium and knowing how to use VIX calculations and knowing where the trends are changing on the VIX and knowing about divergence, all played a significant part in understanding how the market was going to move, and by some simple rules that are published on our website, you could have had a pretty good idea of what was going to happen with the market movement through the course of the day just by having that information. So we invite you to come and visit us at RSKsys.com. Scrutinize our website. Come back to us with questions. Ask for a demo. We're doing some fantastic things that nobody else is paying any attention to. And we're having tremendous success. So we invite you to come and visit us. And this is Rod Kusin and Spooman for Risk.